Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 19th of February, 2019, and we're just after 4:05 p.m. Central Standard Time. Remember the Sonny and Cher song, The Beat Goes On? Well, that seems to be what's going on in the stock market. Yes, it rallied early on and gave up a lot of that, but remember, there's a lot going on right now. The market is looking to see the FOMC minutes. We're going to hear from the Europeans on what they think of their banking this week. We're going to see the Chinese come into the U.S., their head negotiators, and try to put the finishing touches on drafts that give the president reason to what? To probably extend the trade truce. Will there be a deal? I doubt it until you get through the Premier Xi's meeting with his People's Congress and them getting the next step done. What will you expect out of the deal? Well, that'll be the big issue. You know, is it going to be little steps, something big? Nobody quite knows where this is all headed. We also know that the market's got to deal with now the Wilbur Ross report, Secretary of Commerce, turning in on Sunday his report to the president about auto imports and auto part tariffs. That's yet to come. So there's a lot waiting on this market. As you can see, a very simple, non-meandering day at the end. The dollar was down. You look at most of the currencies up with the exception of the yen, which was down against the dollar. Now, when we take a look at what's going on, you can see that you've gone pretty flat the first full trading day of this week. You can see the market's up 170 points for the week, but it hasn't given up much of these gains, haven't had much of a correction, in fact. If you look at how this has all gone, this market has just continued to climb this wall of worry. The pattern on the chart is one of higher lows, higher highs, bullish, and it's been this way for a while, so don't think it hasn't done that. You had a stall here when you slipped to a lower high, but you kept the higher lows all the way through this. You also had another feature take place, which came to light, is you had a crossover. Now, it's a bullish crossover. Right here you saw the 18-day moving average get over the 100. And that was the action on Friday. You made the higher high today. That's what you normally expect from events like that. This puts pretty strong support into this general area. In addition, what about resistance? Well, the resistance has been the 200-day moving average. We popped over that on Friday, carried through today, which is the first full trading day since the President's Day holiday on Monday, and we're knocking on the door of that upper Bollinger Band of 27.94, today's high 27.87.5. On pullbacks in the market, I would expect what had been resistance, the 200-day average, to offer some support. If it doesn't, then the next number, I think, would be the 18-day average of closes. In terms of momentum, it's locked in bullish. Whenever you get this pattern where both the red and the blue, they're called the K and the D lines as measured by the slow stochastics, go sideways for 3 days or more, 1, 2, 3, over 80, and that's got that. In fact, it had it more than that, as you can see. The market tends to rally with that news. And until the red line closes back under 80, the momentum is said to be what? Bullish. So I stay with that. In the NASDAQ, we have the locked-in embedded reading. We have a market that saw a bullish crossover. Let me come back here with you. If you take a look at, this was Friday's close, you just had the 18-day get over the 100. And now today, the market comes up, still fighting at the 200-day average of closes. Even if the markets pull back from here, as I said, I still see layers of support that are into the 18 and the 100-day average. Obviously, what would make that go away is a complete failure of the Chinese talks, but I doubt if you put into a room 10 people, you're going to get one to say they expect a complete failure. When you look at the Dow, you have the embedded reading, the market into the resistance area. And yes, people will say, you know, this is the old buy the rumor, sell the fact. It could be. But I think the most likely event that traders are looking for out of these trade talks is an extension of them. So if that's all they're looking for and not a definitive this is how much you get or not, well, even though some may get disappointed by that, it doesn't take away the bullishness from the market. And you've had bullish crossovers. You had the 18-day right here get over the 100. And now the market comes up and the 18 is challenging, as you can see on Friday, the 200. You have another crossover, and that kicks up the market to the upper Bollinger Band. I'm going to say it again, levels of support on good breaks. In the Russell, same thing, the embedded reading, and this has been the strongest of the embedded readings. It stayed the longest, and it's carrying the market. And obviously the next number if you have to look for a resistance number, it's got to be this number up here, the 200-day moving average, which in the other indices didn't look like that. But remember, on the break in December, I think the Russell was one of the weakest. In the VIX cash, you keep dropping down, embedded reading, momentum continuing to point down. Maybe the lower Bollinger Band in that 1384 area is the next target. In T-bonds, you're in a resistance area. Now, tomorrow, the bonds and the notes will be impacted, I would think. That word is just think. By the FOMC minutes, which if I'm right, they're coming out around 1 o'clock p.m. Central Standard Time. And the market will look and probably play the 2-year versus the 10 more than anything else. So I'd be watching that. What is the trend? It's up, but it's up in a very much of a sideways bent in the market. It's overbought into new resistance, the upper Bollinger Band, that it's failed at time and time again at some point. So we'll see if that's the case again. In the 10-year notes, if we look at today's high, you got to 122.10, which took out the high right here. So now you're back into the pattern and kept it of higher lows, higher highs over the 18-day average of closes. If this market picks up momentum from here, I would look for the upper Bollinger Band of 122.18 as resistance to negate the up action we're having and at least turn it neutral. You'd have to take out Friday's low of 121, and that's 29, and that's just under the 18-day average of closes. Momentum's not a lot of help here. It's sort of just flattening out. In TLT, the resistance is the upper Bollinger Band at 122.55. You got to 122.54 today. Should I say that we're up at the resistance? Overbought in an uptrend. To negate the uptrend, you have to take out Friday's low. And by the way, if you take out Friday's low, you don't turn the trends down, because in TLT and the 10-year notes, you made higher highs than you did on Friday. All you could do is end up with a pattern of a higher high, lower low, back into the 18-day average or some number other than that. That doesn't mean we shouldn't be concerned about the Fed minutes. They're going to give us an idea. Is the Fed concerned about recession, world trade? What are they looking at? Everybody will be scrutinizing that for the minutes of the day. When we look at the dollar index, it's lost its bullish emoji. It lost the embedded reading in both numbers. That's bearish. So now I think traders will look at this market as price in the 18-day average making a run at each other. You'd have to get back over this 97.23 area to convince me different than that. So I'm looking for price to meet that 18-day average, simply because when you lose the embedded reading, you often get price in the 18-day average to come together. That doesn't mean that this isn't a contra-trend trade. It is. And the reason is because the bias is up. But the swing line's down. Now, to get a bear trap going, you'd have to take out today's high, be it on Wednesday or Thursday. Put you right in harm's way of the FOMC minutes. In the eurocurrency, you've reversed. You're trying to turn momentum to the upside. The 18-day average is the logical area of the first stopping zone. Doesn't mean it has to, but that's the logical area. The trend to the downside ended today. You now have a higher high and a lower low. I think the market went flat in front of the FOMC minutes. The British pound came alive. Now, I was watching over the holiday, the President's Day, and what was going on, because even though we're closed, you know, the Brits were open, and I was watching the take by a lot of traders on what they think for the pound. And it appears to me that while the short term they're bearish, long term they seem to be a bullish lot there. That's very interesting. We'll see what comes on. But what did today do? If we look at this market into Friday's close, it has been in a pattern of lower highs, lower lows, under the 18-day average. It made its run to the lower Bollinger Band on Thursday, hit it. Then from there, the market has taken back off. It's out of its downtrend. It gave traders an out against that Bollinger Band, if they believe in that. And now the market is what? No pattern. It's got a higher high and lower low. That's not what I call a trade pattern. In the Japanese yen, this market flirted a lot today with trying to lose the embedded reading, and by day's end, it kept it. And that's why intraday, you've always got to look at the second part of the day to see if it loses it. It's maintaining the lower high, lower low area. I still contend the 100-day average is probably on a lot of traders' minds, and I doubt that many want Friday's high taken out if they're betting on the short side of the market. Got to keep your eye tonight and see how this market opens. If it loses the embedded reading with the red line getting over 20, you might get some short covering coming in earlier rather than later. You know, I wrote today, and I'm obviously getting comments about it on TikTok. I saw them. I'm a chartist. I'm not talking about the innate value of a Bitcoin or the lack of it. But as a chartist, this market certainly looks like a market, especially if you go on the long-term charts from $20,000 down to $3,100. It looks like a market that for the near term, it's bottomed out, sold out, and the market's got more upside than downside. I am not saying Bitcoin has value. I am saying what the chart looks like. And as a chartist, it's trying to break out to the upside at this point in an overbought condition. In Brent versus WTI crude, which is basically foreign oil versus ours, 680 all the way up to a 1027 difference, backed off a little today. That's all that you can say, it backed off a little. What this market has been doing is, as I said last week, and I'll continue this week, it tried and has succeeded in taking sideways action that we had and pushing it to the upside when I said that I thought the market had had an upside breakout. And as the market was doing that, the target could have been the 100-day average of closes. This is Friday. This is today. I feel good with that call. That doesn't mean the market has to end here, but how many days do you have in a row over that upper Bollinger Band? You're over it today. I believe you are. Let's see. You closed 66.45, and that number was 65.90, so today is one. You were over it on Friday. You were over it right here and right here. So you have 4 days in a row. You rarely get 5 days in a row over a Bollinger Band before it pulls to the right-hand side of it. That's what I'm saying. I think the quote-unquote smart money took some money off the table here today. That does not mean they're bearish. I think you hit a natural objective, the 100-day average above the market. You haven't yet hit it in the crude here, so we'll see if, and I'm talking WTI, we'll see if it can reach for that number. Remember, because of President's Day, we get the API numbers tomorrow at 3:30 p.m. Central Standard Time. It actually comes out earlier, as those that buy their subscription get it earlier. And then at tomorrow, and that's Thursday morning, we get the EIA numbers. We'll see what those two do. But the market overbought, trying to push itself out. Not as successful as you did with the Brent versus this. Success was had on pushing out the top part of the gasoline. It could still run. If it wants to run to the 100-day average, that's natural. If it pulls back, I think trade support would be at the 18-day average here, 18-day in the crude as well. In the nat gas, let's go back to Friday. You had an outside day up. That means you got a higher high. That's where I think the downtrend, if you will, again, the retest ended. The real downtrend, I think, ended when you took out this high. Then you fell back into the market, but with this reversal up on Friday, gives pause to any form of decline in an oversold market. And it would not surprise me if you try to get back to what I call that line in the sand, that 18-day average, to regroup. This is today's action, not too far away from it. So you put that all together, you're trying to figure out what to do next, and that's what I'm here about. And that's what I do with my research. I take my research and I try to give you ideas. I started off at 8:30 in the morning with a video. Now, it's what I call my subscriber video. It's not available on YouTube. It's not available on any social media anywhere. The only way you can get your hands on it is via a subscription through us. In it, and it looks just like this. I cover swing lines, which you see me do here, moving averages, slow stochastics, window envelopes, but there's something more I can do. I can say buy here, sell there, put a stop here, here's your trade objective, and hand you when I record at 8:30 in the morning, a game plan. And I do that every day, Monday through Friday. I even did it on President's Day. So I try to do it on the holidays if I'm around. Then, for those of you that want something in writing in place to that or with it, I do my daily market research. I write a report Sunday night, two at least on, well, typically on Monday, Tuesday, Wednesday, and Thursday. I don't write two on a holiday, but I will write one typically, and then away you go from there. So if you'd like to see what this is all about, and assuming you haven't tried my research, why not give it a call or give us a call at this number, 866-973-2077. You can go to our website or you can click right up here. It'll take you to our free offerings and our trade carousel. I'm Ira Epstein. Talk to you tomorrow. Remember the FOMC meeting and the reaction to it.